Welcome to our Form 5472 deep dive for foreign-owned LLCs and C corporations. In this video, we'll walk line by line through what the form asks for, why it matters, and how to avoid costly mistakes. I'll summarize the essentials, explain key terms, and show practical steps you can take to stay compliant without the stress. If you own a foreign-owned US LLC or C Corp, Form 5472 isn't optional. Missing or incorrect filings can trigger penalties of $25,000 per year per missed form. In this guide, we'll explain exactly what needs reporting, the common pitfalls to avoid, and how a straightforward filing process can protect your business and cash flow. Form 5472 is critical because it's an IRS requirement for certain foreign ownership and related party transactions. It carries steep perform penalties, and filing errors can invite long audits. As shown in the image, detailed numbers and documentation matter, so careful preparation reduces risk and keeps your company off the IRS radar and out of expensive enforcement actions. Not every US entity files Form 5472, but specific rules apply. US corporations with at least 25% foreign ownership typically must file. Foreign owned LLCs are generally treated like corporations for reporting, and any entity with reportable transactions with related foreign parties must disclose them regardless of ownership percentage. Understanding these thresholds prevents unnecessary filings and penalties. Part 1 covers the basic identifying information the IRS needs: the reporting entity's legal name, address, EIN, and tax year end, plus the foreign owner's full name, foreign address, and country of citizenship. Accuracy here prevents common rejection reasons or processing delays, so take time to confirm names, numbers, and dates before moving on to the financial details. Part 4 captures reportable transactions between your US entity and related foreign parties, including sales and purchases, rents and royalties, loans and interest, service fees, capital contributions, and dividends. These items should be tracked throughout the year so your numbers align with your books and you can reduce audit risk rather than scrambling to reconstruct transactions at year end. Part 5 asks for additional detail on payments to foreign owners, receipts from foreign parties, and any related party agreements that affect transactions. This is where you summarize distributions, receipts, and contract terms so nothing is missed or misreported, and providing clear supporting documentation makes the rest of the filing straightforward and defensible if questioned. Even small mistakes can trigger penalties or IRS scrutiny, so avoid the most common errors: filing late or not at all, omitting reportable transactions or amounts, supplying incorrect foreign owner information, and letting your books diverge from reported numbers. A careful review and reconciliation before submission minimizes queries and keeps your filings clean and penalty-free. For stress-free filing, keep clean, year-round bookkeeping, and log related party transactions in real time rather than retroactively. Verify EINs and ownership percentages early and submit filings well before deadlines to catch errors. Implementing these practices turns an anxious end-of-year scramble into a smooth workflow and greatly reduces the chance of penalties or audits. That wraps up our line-by-line overview of Form 5472 for foreign-owned entities. If you want expert help to stay compliant, minimize penalties, and make filing stress-free, reach out to MakeMyFinancials. We handle everything from bookkeeping to IRS accurate filings. Like, subscribe, and send any questions you have. We respond to every inquiry and look forward to helping you in the next video.